Let's run you through our three guests who will be joining in over the next half hour. Akash Prakash, CEO and Managing Director at Amnasa Capital, will be joining in. We've got K.R. Bharat, Managing Director at Advent Advisors. And on the charts, Ashwini Gujral, Fund Manager at ashwinigujral.com.
Ashwini, let me come to you first. What have you made, on the closing basis, the way Nifty and Bank Nifty have ended, taking into account the price volume action in the last 3 days? If some trader has been riding the longs, where would you really advise him to keep the stop loss on the Nifty and the Bank Nifty?
Well, first of all, it depends on what view you are taking. If the view is that this is still a downtrend, which is shown by the lower top and lower bottom that we have made this time, lower top at 6,070 and lower bottom at about 5480, then anything you get on the long side is a bonus. And after a 200-point rally, definitely you should tighten your stops. In case we start trading above, say 5750, 5780, then maybe you could reckon that the market has still not reversed and is still sideways. But I think the market is moving down finally, and 5500, while it has held on this time, but we'll have to see if we are really able to sustain this rally going forward.
Bharat, what is your view? Do you think we are able to sustain this kind of a rally?
Well, I've been saying the same thing like a stuck record for almost 2.5 years now. I think the macroeconomic outlook continues to look fairly serious. And I think in the long term, I would tend to agree that we're going to see much more of a downside than we've probably seen in the past. Having said that, I actually believe that over the next month to a month and a half, this rally could sustain on the back of a few factors. One is, I actually believe that the rupee is going to show some kind of a pullback. You will see an appreciation of the rupee, and my own suspicion is that it'll probably break 60. It'll come back into the 50s for a while. And I say this for a couple of reasons. One, I think that most of the covering of dollar that Indian industry needed to do is done, and you will see some profit taking. The dollar is also seeing some international weakness. I mean, you've seen the yen strengthen. I think, therefore, because of these technical factors on the FX market, the rupee will sort of strengthen a little bit, which could lead to strengthening in the markets. And of course, at that point in time, a lot of people will jump onto the bandwagon and say, look, now there's a case, for interest rates to come down. I certainly don't believe anything of the sort, but because of this sort of short-term technical factor on the currencies, if you will, I think this rally could last a little longer than people think. But having said that, don't get me wrong. I continue to be bleak on the macroeconomic front, and I think a lot of work needs to be done in terms of policy action, in terms of reform, before we can sort of turn things around. So for those who are long, I think the next month and a half will give you an opportunity to get out. The overall outlook, hasn't changed in the long term, though.
All right, Bharat. Akash, the banking pack had actually turned around quite smartly, and the recovery or the up move has been clearly led by private sector banks. You have liked this particular pocket in the past. Do you think private banks, status of being safe haven now has reduced somewhat?
No, I don't think they've lost this in the sense that, I think the stocks will still do well because, you may argue that they had gone up too much in terms of valuation, and therefore, the valuation excess to a certain extent is getting corrected. But if you take a 3 to 5 year view, I still think the outlook for private sector banks is extraordinarily favorable. They're in an environment where, any type of economic stability, they will do well. They're you would argue, though they're not showing it yet, but asset quality pressures are rampant in the banking system currently. NIM pressure is there right now. But they have a huge growth opportunity because the public sector banks are very undercapitalized. The public sector banks will have genuine growth challenges over the next 3 to 5 years because they don't have capital. They were very, they don't have a very young workforce. So there is a huge opportunity for the private sector banks to keep gaining market share from the public sector banks. And even if you assume, 5-7 new licenses are given, by the time those people actually set up banks, by the time they gain any traction at all, that's 3 to 5 years away. So I think for the next 3 to 5 years, you have a real sweet spot for the existing private sector banks, where they can gain huge chunks of market share and do really well. And I think the valuations now for a lot of them have come down by 15-20%. So we still like private sector banks. So we think that's a good space to be in.
Ashwini, what about you? Would you ride the momentum in names like a Ranbaxy and DLF?
While these stocks can go up and, chances are that most stocks will go up, ones which are beaten up may go up even further. But the rule for playing long needs to be things which are making new highs, and there's a segment of the market that's doing that. So you would stick with the pharma stocks like Lupin, Sun, Dr. Reddy, or tech stocks like TCS, HCL Tech, Tech Mahindra. I don't think, getting into stocks which are coming back from new lows is a very good idea.
Bharat, scratching that point a little more, that underlying macros of our economy continue to remain weak, and this is a tactical bounce or technical bounce which is happening right now in our markets and may fade out. Which are the areas you think which have run up ahead of the time, or fundamentally which may get expensive, say in 15-20 trading sessions from here on?
Well, I think, if you really analyze this market, it's a market of maybe, 25 to say 70 stocks, depending on, what kind of fund you're managing or what your outlook is. The days when we used to talk about India having 8 or 10,000 listed stocks are gone. I mean, today the universe has really shrunk, and you don't have a mid-cap or a small-cap universe anymore. So really this index that we're talking about is not really an index. It's where these 20 or 50 or 100 stocks are. If you really analyze the broad market, the actual index is probably far lower than what the actual number indicates. So to come back to your question, I think, all the fundamentally well-managed scripts have gone up, and they're trading far ahead of what their actual valuation would be in perhaps a more normal market. So what I see happening in the long term, I would probably tend to stick to maybe the IT and healthcare. In the short term, yes, I think because of the reason that I mentioned at the top of the show, I think your banks will do well for a month and a half, particularly if, as I believe, the rupee appreciates. But I mean that is the time I think you need to take a lot of tactical decisions. If you're sitting on on an existing portfolio where you have a lot of banking stocks, I would actually get out of them, for the medium term. I'm not talking about a 4 to 5 year perspective like Akash was. That what he says is absolutely right. If you have a 4 to 5 year perspective, then the private sector banks look good. But if you are looking at a 6 to 12 month perspective, then I'm not sure that I'd like to be long on the banking space a month from today.
Okay, that's an interesting opinion coming there. But Akash, what about stocks like a Lupin? Ashwini just flagged it off, and it is seeming to be a safe stock from the pharmaceutical basket. Continues to make new highs. Not the best set of numbers, but do you continue to remain bullish?
Yeah, I agree, but I think you can't be so I mean, again, maybe very different, but you can't be so focused on one quarter. I mean, look at Lupin, look at their last 5 year track record, it's outstanding. And in that 5 year track record, they have had occasional quarters like this where people have been disappointed either on margins or revenue. In this case, the disappointment was revenue, not really on margins. So I still remain a believer. I think Lupin is an outstanding management team, very well positioned for the future. I think Vinita will be a great CEO. I think Nilesh is an outstanding, executive director. I think he runs the whole back end in India. She runs the US front end. Kamal Sharma and Ramesh, the CFO, again, an outstanding team. So I remain a believer in Lupin. I will not sell on the basis of one quarter where I think there are some explanations for why the revenues were light. I mean, India is clearly understandable. There's some explanations for Japan as well. So I will not use a one quarter revenue miss to exit a position on a company which I think over the next 2 to 3 years still has an outstanding growth opportunity.
Bharat, in terms of some of the mid-cap names from the pharmaceutical basket, is there any expectation of a good set of numbers from Wockhardt? Are there any other stocks that you'd be betting on?
No, I don't sort of comment on individual stocks, but when you speak of mid cap, like I said, I mean the state of the market is such that nobody is looking at mid cap or small cap because of the extent to which people who've held these stocks over the last 2 to 3 years have been battered. I wouldn't even advise people to look at mid cap or small cap stocks at this point in time, because in an environment like this, where, like I said before, the macro situation continues to be bleak, it's only those 25 or 30 or 40 stocks where you have A, outstanding managements, B, you're in a sector where at least there is some sort of a forecast of growth that you can make in this environment. It's only these stocks that are actually going to give you returns, and these stocks may, as every day passes, continue to look more and more expensive, but the savvy fund manager is going to be putting money only in those stocks. And the third thing I forgot to mention is companies that are not leveraged, because today I think high leverage is pretty much a death knell in this environment. I mean, if you've got huge amounts of debt, then this is the wrong country and the wrong market to be in. So, good managements, low on debt, and at least a business where it is possible to make some kind of earnings forecast. I mean, if you've got these three, if you tick these three boxes, then I would imagine that most fund managers would only be looking at these kind of stocks. And sadly, you don't have a whole lot of mid-cap. I mean, while you do have good stocks in the mid-cap, small-cap segment, most people are not even going to be looking at them, because if things turn a little hairy, you're not going to be able to even get out of some of these stocks. So my advice would be for those who feel compelled to sort of make investments in high-risk assets at this point in time, these are the only three criteria that you should be looking at.
Ashwini, out of the entire metal pack, of course, last 2 days the activity was quite inclusive, but today a lot of names started going soft in trade. Hindalco, Coal India, NMDC, even JSPL for that matter. So on the downside, which of them looks weakest to you?
See, basically anything that's in a downtrend can easily have a 3 to 5 session type of a rally. So you can safely short most of these stocks once they go up 3 to 5 days. And given the falls they've had, any kind of 10-15% rally, you should look to go short on them. There's a clear demarcation. There are sectors where you go only long, which is the export-led sectors, and then there are commodities and rate sensitives and economy stocks, where for the moment you should only go short.
Akash, what do you think is the best way to really bet on the Indian consumer? If staples are expensive, then opinions divided on auto and more pain for private banks in the short term, you think?
Yeah, no, it's a tough call. I mean, you can. The problem is those sectors are very expensive. So, I mean, my view would be that there's no point buying FMCG. So you could buy maybe media as a disguised play on consumption, because if FMCG growth slows down, like I think it will, they will have to pump more money into advertising to maintain volume growth. So media could be one way to play it. Second is, you could play some of the agri input stocks, which are play into not rural consumption in the sense of FMCG consumption, but they're a clear play into a good monsoon. So, if you look at things like, Coromandel or Rally or stuff like that, they don't have any economic sensitivity. They're not linked to the investment cycle. They're a clear play on a strong monsoon and increased purchasing power with farmers. So if farmers have more income and feel confident about their outlook for crops, they will spend more money on agri inputs. So that could be another way of playing it. But the simple classic way of playing it, I think, is consumer staples is a tough way to do it right now because of the valuation.
Bharat, have you looked at any of these pockets, oil PSUs or Hindalco or M&M, and how in general are you witnessing the first quarter performance of corporate India this time?
Like I said earlier, and I've been saying this on a lot of channels, including yours, for a long time. I'm not focused at all on any sector where a stroke of a politician or a bureaucrat's pen could significantly affect profitability. Also, at this point in time, my focus, quite honestly, is more in terms of managing the existing portfolio and not, doing anything incremental in equities. Like I said, and let me first say that I only make money in, when prices go up. I don't make money in a bear market because, I'm not a trader. And therefore it's very tempting to sort of, to look at, 20 reasons why this market should go up. And then one tends to sort of ignore, reasons that are staring you in the face for why, the markets may actually not perform. So for the last 2 years, I've actually been, unequivocally, but I wouldn't use the word pessimistic because by nature I'm not a pessimist, but I'd say realistic in terms of how I believe the economy is going to perform and therefore how I believe the markets are going to do. And given that I don't have a compulsion to invest in equities because it's not like one is managing a fund, I've actually tended to stay away from equities. So, whatever analysis I've been doing on a lot of these stocks has sort of been more cursory than with a way to sort of, it's more homework to sort of figure out what I would buy when I genuinely believe that things have turned around. So the honest answer to your question is no, I wouldn't look at the oil sector. I wouldn't look at sectors where too much depends on government policy, and I actually believe it's going to be a while, technical sort of movements notwithstanding, as I said earlier. I think it's going to be a while before we can actually say that India is headed for a bull market.
Let's get a handle on some individual stock recommendations to watch out for. Start off with what the dealing rooms are talking about, and Darshan joins in with that list. Darshan.
The first stock you have to watch out will be Infosys. If you're looking at Infosys, stock is trading at its lifetime high, technically a big breakout or something that is seen on the counter. But the interesting point on Infosys is the fact that if you saw on the futures premium that was close to almost 20 points yesterday is down just to 3 to 4 rupees at this point of time, clearly which indicates that there is a lot of delivery based buying happening on the counter. So dealers are recommending this as a positional buy. Also over the past few days, Narayan Murthy has met a lot of investors and he has assured them, of a good growth in the company. So Infosys is something that dealers are recommending at this point of time. And the second one is ICICI Bank, which moved up in trade today. If you're looking at it, what dealers have indicated is that most of the selling that had to happen in the company has happened, and probably a lot of buying is something that they expect to come in. The Bank Nifty is pretty much above the 10,000 level. So clearly banking is something that could find focus among traders in the next few days. So on both on the long side, Infosys as well as ICICI Bank.
Thanks for that, Darshan. Ashwini, what are the specific stock ideas you have for trade going forward?
Well, for the moment, you should look at Reliance Communication, which is a buy with a stop of 128, target of 140. United Spirits is a buy with a stop of 2350, target of 2440. Axis Bank is a buy with a stop of 1100, target of 1160. And Natco Pharma can be looked at with a stop of about 590. Look for targets of about 650.
Bharat, 30 seconds, your view on the telecom space. Do you see more potential here?
Not really. I would actually repeat what I said earlier, which is I think, in the medium term, it's going to be IT and healthcare that people will focus on, primarily because of where the rupee, I think, is headed. On the telecom space, once again, just too many sort of regulatory issues, if you will, and I would sort of I would advocate people to be a little careful at this point in time. And like I said, again, if you split up an analysis of this market into two, one is the sort of the immediate short term where I believe that there is a sort of technical correction due to happen on the upside because the rupee, I think, will sort of correct a little bit. But then going forward a month and a half down the road, I think, that correction will finish. The rupee will start sliding again. Sure. And that's the time I think, you want to be, well, I wouldn't use the word loaded up, but you want to be long on IT and pharma and not look at too many other sectors. If like I said, you have a compulsion to be invested in the market.
Okay, we'll leave it at that. Thanks very much, gentlemen, for joining in.